snow or gravel, or from suburbs to city. The super all-wheel control in the 2022 Mitsubishi Eclipse Cross means that the only limit to your world is your ambition.
All right, all right, all right. How we doing today? How we doing today, family? Thank you for joining me. Appreciate you as always. You all are the best. All right. Um, I'm not going to start this any differently than we normally do. I'm going to start by lighting the candle, get the vibes right. If the feng shui is not on, if the feng shui is bad, Lowedaddy does not stream. Lowedaddy does no press. As soon as this is going, I want y'all, let me know. Well, there's only a few of us in here, but still, curious. Let me know you're here. If you're making some money so far today, give me some ones up in the chat. If the market is neither red nor green for you right now, it could go either way. We gotta push this puppy north. Give me some twos up in the chat. And if you are in the red so far today, and we really gotta send this baby north so we can make some money together, give me some threes in the chat so we can know what kind of energy we gotta get going. Feng shui is set. I'm gonna get rolling. Come on, load, buddy. Alright, there we go. Let me increase this to 125 so y'all can see it better. Then we can dive into some monies. Jacob, you had some. You're down right now. It's all right. We're gonna turn this thing around for you, buddy. What are you in right now? Let's take a look at something you're in. What are your plays? I got some plays I'm considering, but I need to do some more research on my end as well before I preach anything to y'all. Let's get to the right. Oh, thank you, Savvy. Appreciate you as always, my friend. Great to see you today. How's your portfolio looking? I think we looked at SENS, GSAT. Let me look at GSAT for you. This is SPAC also, right? Is that another Gore's Metropolis play? No. Global Star? Okay, we can take a look. Oh. SEC filings. ePay or AKM. Okay. Alright, let's look at GSAT first. I'm gonna try to get to all of y'all because that's the beauty of y'all being the few in here as we first start up. I'm always gonna prioritize y'all, same as I was doing on Taylor's channel. You know, and we have a chance to talk to each other right now. There's a bunch of people in here. We don't get that same luxury. All right, let's go look for some SEC filings. Let's see what the last reports are. Now, Jacob, I think you've tuned in before with us, and you know that anything, the closer a stock is priced to zero, the more risky it's considered. Of course, the rewards, if the stock, ends up increasing in price, are exponential compared to what you'd get if you bought into Amazon or Tesla at its current price. So let's take a look, though. So the financials typically aren't really good. Not really much to be too concerned about, though. If you're in it for a high upside. If you really like the company, that's one thing. If you're in it for like a quick, double up and let's flip it, this might not pertain too much to you. All right, let me go bring this over here for the numbers, just so y'all can see full screen when we do the numbers. Let's see what industry they're in. Okay. Did I even spell satellite right? No, it's two L's. Today is the 2nd. Current stock price. Let's go ahead and refresh this. Get the most recent one. Not really any movement today so far. It's at $1.73. Was at $1.74 yesterday. What's bringing you into the red right now, Jacob? Thank you, Savvy. I appreciate the kind regards, my friend. Appreciate you as always. Keep grinding. I love seeing the Twitter content from you. Stay consistent with you. Mainly IDEX. Okay. IDEX is red. Total assets. Let's bring this up. Okay, where are our assets first? There we go. So this is going to be their Q3, guys. These are going to be in thousands. Okay. Almost $1 billion in assets, down from last year. 165, 590, 123. That's what they were last year. You can see we've gone 55 million in the wrong direction. Nothing to be too concerned about, though. Let's see what happened. See where our liabilities are. Oh god, they make me do maths. I hate doing math. Alright, let's go find our stockholder equity first then. It's 400 and... Oh. Up here. 446, 555, 123. Previous period, it was 407. So it's gone like 40 million in the right direction. We'd love to see that. That's a good sign for you, Jacob. 39 million in the right direction. So let's go look at what this is going to equate to in terms of our current and previous period. Going to equal this minus this. Boom. And then the same can be said down here. It's going to equal this one minus this one. So our liabilities have gone down by about 100 million. So even though our assets have gone down, you can see what that does for our equity in the company, our stockholder equity. We want this number to always go up, and it has $40 million this year. So they're making moves over there. As a shareholder, you're going to love to see that. All right, total current assets. 73, 311, 123. And the current liabilities, 107, 177, 123. So we are not liquid. You know, that's not a great thing. You know, this is in terms of liquidity, insolvency is below 1. So that's something to keep an eye out. You know, if they all come knocking, because our money is due in under a year, we don't have enough liquid assets that can, or enough assets that can be liquidated in under a year to pay for all those liabilities. So when they drop their 10K, their annual report, which is probably going to be in the next month or so, you know, look out for that. See if those numbers have, or if that gap in between numbers has, you know, shrunk. This is for Q3 2020. Revenue. Scroll back up. Okay, so for the current period, Q3 2020, we did 32,757,123 in revenue. Same period last year, we did 38,614,123. So we have done, you know, about $6 million less in revenue in Q3 2020 compared to Q3 2019. Year to date, we're looking at 93,315, 123. And last year, same time period, we did, oh wait, sorry, this is supposed to be 9.5, not 9.3. 9.5, boom. 315. Same period last year, we did 9.9,883, 123. Boom. It's about $4.5 million less than we did same time last year, or in the same period, 9 months last year. Not a big deal. We all know 2020 was anything but a typical year. Net income. Let's take a look at that. Did we take a loss? We did take a loss. It's all right. We lost 24946,123. Previous year in the same period, we made this much money in income. Not sure why we took a loss this year compared to last year. You know, we did slightly less revenue, but that's, you know, a lot of money to lose that must have been paid for debts or something. Let's see where all the additionals coming from. Oh, we gained $50 million less dollars in derivatives, so that's why. All right, year to date, we took a Yikes. Almost $88 million loss. Previous year, we gained $53 million. So our profit margins have, gone down drastically, you can see. This year, 2020, 2020, 2019, 2019. All right, let's go find our outstanding shares. Okay, so these are in thousands also, except for per share data. 1670 315 123. Let's go see if we have anything for preferred shares. Nope. All right. Book value is going to be 27 cents. We're trading about 6.5 times the book value right now. Not saying it's overvalued, not saying it's fully priced. That's right in that kind of, gray area of, anything below 3 is for sure. Anything under 1.0 is for sure undervalued. Anything below 3 is a high chance it's undervalued. This could be fairly priced, but at the same time, the stock is so cheap, it could very well, go up 20x from here, right? If you get some good news. So that's something to keep an eye out for. Brogan, what's going on, my friend? How you doing? Deliveroo IPO. I'm not familiar with that. Let me look at that one next, Savvy. Let me write down real quick, just so I don't forget. Let me get my notebook out. Write down the ones that you guys mentioned that we haven't gone over yet. If you guys know anything that you're in also that had earnings that just got announced or something, those are the real fun ones to look at. Anything with the recent earnings. Otherwise, we're looking at stuff that's outdated by about 3 or 4 months now, and they can do a company can do a lot in 3 or 4 months. So we're looking at, where's this one? This was GSAT. Done. You also are in OCGN. What's losing you money right now, Brogan? ePay. AKAM. Some good catalyst and potential coming in the next few weeks, months, but yeah, it's mainly what's a catalyst for Ideonomics, Jacob. Better turn off soon. I have dropped so much cash on tips. Jacob Continental owned a tech company that is a road that charges up electricity as you drive along. Imagine if they took a position. Oh, that would be massive. And then the Deliveroo IPO. SNPR is losing you money. The facts, most of the facts today. What's you're an SNPR? I think I looked at that not too long ago, and I wasn't, bearish on it, which is not usual. There's a lot of SPACs out there that I am very bearish on, as you know. SNPR, Deliveroo. Let me look at that one next. And if you guys aren't already, your boy's in Ethereum. I rep my positions. This is going 10K. Within the next 5 years, Ethereum will be worth $10,000. This may not be the first place you've heard it. And if it is, you probably won't be it probably won't be the only place you hear that. Some people are much more bullish than I am on Ethereum. I'm gonna bring this over here in a second. If we find anything, Deliveroo IPO. I wonder if they have an investor presentation. It'd be even better. What do you like about ADA, Brogan? Because I don't know. I mean, I'm trying to learn more about Cardano. Um, so I'm reading with y'all, trying to catch up. Man, y'all are talking fast. He's out there 5G spectrum to a larger mobile company. Fingers crossed. I'm keeping my fingers crossed for you, Jacob. I want everyone here to be making bank. But yeah, Brogan, fill me in on what you like about Cardano. You know, oh yeah, Savvy is the man. Um, you know, what I heard about Cardano though is that, you know, I've been in crypto for I don't know when you first dove into crypto. I've been here since 2016. Um, September 2016, I bought my first $100 of Bitcoin. Um, Quickly used that to buy weed because I was in college, and that is now the most expensive weed I've ever bought in my life. Because that would be worth about $5,000 today. That was Bitcoin. Um, if I would have held it. But you know, you live and you learn, and I was a stupid college kid. But you know, yeah. Um, that was my first exposure to crypto, and so I've actually started investing in it in 2017. Okay, so you've been in for a while also. Um, and then Cardano. What I love about Ethereum, because I mean 5 years you're familiar with it then, right? What I love about Ethereum is the smart contract capabilities, right? I think Bitcoin is, likely to always be top dog. I think eventually, if EIP 1559 does get passed this Friday, that's something to keep an eye out for. And if Ethereum 2.0 is integrated effectively and everything goes well, we're going to start burning off some of the supply, um, which is going to deflate, the currency, which is great for us. Um, but what I'm most excited about is the smart contract capability. Gas fees have always been the concern, so that's gonna get alleviated a little bit with EIP 1559 if it passes, and then also Ethereum 2.0 when it changes to a proof of stake blockchain versus a proof of work, through mining. Um, that's gonna do tremendous things for not only gas fees, it's going to lower those drastically, but it's also going to make it more efficient. So instead of only doing 30-ish transactions per second, being able to process that through proof of work, it'll be able to do hundreds of thousands per second, which makes it, a tangible use tangible use for the entire world. Um, what I'm most excited about for smart contracts, because those of you who are unfamiliar, now that we're here now, I don't have 30 to 50 people I gotta, entertain who might not be interested in blockchain or learning about it. We can go over it. Uh, Smart contracts, they exist to cut out the middleman of deals, right? The best way I've heard it compared is with like Kickstarter or GoFundMe. If I don't know if any of y'all have created a GoFundMe or a Kickstarter before, but basically how it works is you have your goal. Let's say I want to raise $1,000 for little Jacob down the street who just broke his arm, right? And I want to raise that in 2 weeks. That's my goal. So I'm going to blast my socials. I'm going to have all my followers blast their socials if they want to, or if they can help out in any way. And then, if they want to contribute to the cause, everyone contributes, say, $10, $30, $50, $100, whatever. And if you reach your goal, that money is released to you. If you don't reach your goal, well, that money goes back to everyone who contributed, and the person who makes sure that the contract is enforced is Kickstarter or their GoFundMe, and they charge you a fee. Um, Now, what a smart contract does is it does that automatically, so it makes sure that if the terms of a deal are reached, if I raise $1,000 in under 2 weeks, that money will be released to me, and if I don't raise $1,000 in under 2 weeks, that money is going to be released back to the people who contributed. That's the deal we made. And that's the deal that's going to get enforced. Now, what I'm most excited about for the potentials of that being applied to the real world are derivatives trading, right? Anything that's contractually based, so like options, forwards, futures, any of those kinds of trades. I keep hearing it more and more often now, people talking about it, of, the person who enforces those contracts is the clearinghouse. They've got $100 billion fund that basically says if this person's unable to fulfill their end, X stock reached $100 by April 2nd, you get to buy 100 shares of it and you want to cash in on that and they can't fulfill that for you, well, they make sure that you get taken care of while they go collect the debt from the person who, can't fulfill their obligation. That, creates certainty in the market. Now, with, that's the clearinghouse. If there's a real person or there's a real, organization involved to make sure these go through, those are the fees you see attached to trades as well. And, when you're trading billions of dollars a day like some funds do, or I guess derivatives are traded billions of dollars a day as an entirety, but hundreds of millions or tens of millions of dollars a day in derivatives, those fees can rack up. And if Ethereum's blockchain can do effectively what the clearinghouse offers for a fee that is less than the clearinghouse charges, I'm confident that some funds slowly are going to switch over to trading their derivatives through the blockchain rather than having a clearinghouse enforce their derivatives trading. And if that happens, Ether, that's what we buy. That's what is required to fuel the blockchain. It's the gas for it. It cannot run without it. So they pay a small transaction that, and if people are needing to use ETH more and more as the demand for it increases, what does that do for our supply, right? It's just simple supply and demand. As the demand increases and the supply stays constant, hopefully it stays constant by that point. They haven't hard capped Ethereum yet. That's something that I'm still looking out for because I think they need to. It's going to shoot the price up to the moon. That's the end of my spiel. Tokenized exchange trading by 2030. Market. I'm with you. Hang on, I want to catch up in chat now. Yeah, that's the best way to think of it, Savvy. I try to turn every single L of mine into a lesson. You're paying a fraction of what my buddies paid to go to business school or to learn accounting. Like I'm learning accounting by doing, right? I'm learning financial analysis by doing. And I'm taking L's along the way, but we got to learn why those were L's. Make that a good use of our money. Otherwise, if we just move on, we're not making good use of our losses. Technically, research these companies and have whiteboards and binders of info on building. Legitimate a long-term TD mirror trade account. Set orders for when my algo predicts reversals and look aways. Awesome, awesome. Savvy, my crypto's a bit more simple. You invest in the company releasing the token. I get shares in them and 50% of your investment back in tax relief as... Ooh. Good morning, Tiger House. How you doing, my friend? We're talking crypto right now. I don't know if you know anything about crypto or if you're in any of the cryptos currently. I'm only in 3. I'm in Bitcoin, Ethereum, and VeChain. And so I was looking to get into ADA, Cardano, but what I heard is that they don't have smart contract capabilities yet, right? So I've made the mistake before in 2017 of investing in some really good sounding projects that sounded like they could, revolutionize the world, and those projects all tanked as the crypto market tanked. So when Bitcoin and Ethereum went down, those all went to zero. And even though crypto started running again this year, when I checked again this year, those were all still at zero. They never recovered. The projects went under. So I'm not saying Cardano's going to do the same thing, but I'm hesitant to invest into another altcoin that doesn't have the full capabilities yet of what they're looking to accomplish. And I get that's why you're investing at a low price right now in a beta, and the rewards are going to be higher, but it's also riskier, right? Like we talked about. I might sprinkle like $500 into Cardano eventually. I just did that with VeChain as well. VeChain is another project coin, but they're backed by China. And typically I don't invest in China, but it's not a competitor of Ethereum, which is what Cardano would be. If Ethereum 2.0 is a flop, that's where Cardano is really going to succeed. So it'd be hedging your bet, and I'm totally okay to do that when I'm a little bit more liquid. But with VeChain, it's completely different, right? They're looking to tackle supply chain issues, disrupt that industry. The simplest example I've heard is, let's say you run a grocery store and you've got ice cream, and you know that ice cream cannot be stored in temperatures that are below 30 degrees Fahrenheit, and it shouldn't be stored in anything that's, I'm sorry, the ice cream can't be stored in temperatures above 30 degrees Fahrenheit, and it shouldn't be stored in anything that's under 0 degrees Fahrenheit. I don't know the ice cream parameters, but with VeChain and their use of RFIDs are not new, they've been around for a while, but with their technology and the integration with RFIDs, they can tell you if your ice cream has been sitting outside of that temperature threshold for exactly how long it's been out there, when it's currently outside that threshold, so that you are more educated of your product every step away the blockchain. But it's also aiming to tackle counterfeiting as a huge issue, right? So you always know where a part came from if it's legitimately what they say it is. So completely different than Ethereum, completely different than Bitcoin. Super cheap, so it is risky. I'm not going to say it's not, but it's something that I'm bullish on now. I've done my research. I took about 3 months of learning about it before I invested in it. So VeChain is what I just invested into last week at about like 4 cents a coin. So something to keep an eye out for. I also like that VeChain has been here since the last bull run. So they've survived a crash and they've come back and they've increased in value since that last bull run. Their partnership list is also insane. Like, let me pull up this list for y'all. VeChain. I appreciate that, Tiger House. Thank you, my friend. We got 5 viewers in here. We got 5 likes. I love y'all. Look at this list. I just sent this to my buddy the other day. He works at Goldman, and me and him get to talk crypto because he can't trade anything in the actual market. Just gonna go. He has to get everything cleared first. By the time you get stuff cleared through his manager and then their manager, it's like your opportunity to get in is kind of gone. So he's been diving into crypto with me, and I sent him this, and he was, pretty blown away. I was blown away. This is my first time seeing it about a week ago. I'm not sure if it's the exact one. So you've got big companies up here, 22.4 billion. That tells you their use case down here. I can drop this link in the chat for you all also, so that y'all can see it. You guys can do your own digging. And yeah, basically this just describes what their affiliation is, when they partnered, how much revenue they do every year, this company. So PricewaterhouseCoopers, $37.7 billion. But then, as you scroll through it, you're going to see companies like, I'm sure these are all big companies. They're all doing billions of dollars. Oh, wait, sorry. This isn't the right one. Give me a second. I'm going to find the right one for us. Y'all can ignore that link for now. There it is. A couple names are going to stand out to y'all for sure. Also, the person who invented VeChain, or one of their co-founders, is the ex-CEO of, I think CEO and maybe co-founder also of Louis Vuitton China. So he's experienced the counterfeit issue firsthand in the worst country in the world when it comes to counterfeiting. For us as a consumer, it's great. You can get stuff that looks very close to authentic for a sliver of the price you'd usually pay. But yeah, that's the real link, the second one. They've got China's national government in this area. It's an economic development zone, right? So China's not going to let them fail. Um, BMW Group, they are a partner of theirs as well. I believe Walmart China just partnered with them. So they're getting really, really, really strong partnerships to pair with um, their project. People who say, yeah, your project would help us solve a huge issue. They've got like 40 something partnerships. I'll let you all scroll through there before I keep harping on VeChain. But like I said, I took about 3 months of researching this with my buddy in my ear. Invest, invest, invest. When it was at 9/10 of a cent, and I didn't. I got in at 4 cents. So there's your little rundown on VeChain. Really, really impressive technology. So we'll see. We'll see what comes of that. That's one of the risky plays, though. It's 4 cents a pop. You know what you're getting into. If you guys play OTCs, you'll love VeChain. I think you're gonna get a higher long-term reward than you're gonna get on most OTCs, if I had to guess. Look at Deliveroo though. Okay, so we're looking for some disclosure on March 8th. Okay. Oh, yeah. I mean, if you can get this at a fair price, Savvy, I would jump in immediately. Anything that's Amazon backed is going to go to the moon. They're not going to fail. They got hundreds of billions, trillions of dollars to work with. I don't know how prominent is Deliveroo over there across the pond, Savvy. Are they? Oh, thank you, Tiger House. I love you, my friend. Um, how prominent is Deliveroo over there across the pond compared to, Uber Eats or Grubhub or DoorDash? Or I'm not really familiar with what your, uh, I guess, food delivery market looks like over there. Who your main players are. I know Uber Eats, I'm sure, is over there. Um, Grubhub and DoorDash, I'm sure, have probably made at least some kind of splash. But where would you say Deliveroo ranks amongst them all? All right, I'm gonna move on to the next one for right now. Let's see, ePay. That was another one we were looking at. Let's do this. Burp. I'm gonna bring it over here just so y'all can always follow along with me. It doesn't slow anything down. All right. ePay stock. It's Just Eat and Deliveroo and then Uber Eats. Okay. So you're saying Just Eat and Deliveroo are the leaders currently in the UK, if I'm understanding correctly. If y'all are just joining right now and you are unfamiliar with me, my name is Lowedaddy, Lowstradamus, Lowrider, Lowstress, some days Barry Manilow. But the bottom line is, I like to look at the companies that you're investing in and I'm investing in. I like to look at the financials for them, the fundamentals. What does their money in versus money out look like? What do their assets versus liabilities look like? What does their management look like? Who is driving our investment ship forward so that we can 2x, 3x, 4x, 10x, 20x our investments and accomplish and conquer that next tier of wealth? or tiers of wealth, depending on how many X's we get. All right, I'm looking at bottom line technologies right now for you, Savvy. Let me know all the way, also in the chat, what companies are you invested in that you want to see us go through? We got 6 people in here. We'll be able to get through, quite a few companies. I'm hoping to at least get through a couple of them for each of y'all. Do appreciate y'all tuning in here. Y'all are the bomb. All right, Q2 earnings release is coming up. They filed their 10Q. Okay. Filed their 10Q in February, so they're on a fiscal year, I'm assuming. Can y'all see the screen all right? Oh, you're the bomb, Savvy. Appreciate you, brother. So we've got ePay. It's at 44.13 right now. Oops. What is their sector? So they're in software. Let me get this. I'm going to go to their sector next. 44.13 when I first looked. Last close was at 44.40. 1990, 1, 2, 3, 4, 5, 6. TWND just released quite an interesting merger. Okay. Buying 2 companies as part of the merger effective valuation. Oh, thank you. I appreciate that, Tiger House. I have worked long and hard to get this up and running as quickly as possible for y'all so that me and TC can keep streaming for y'all every day as we shift our usual routine of being in the same office. We're going to be in the same office a little bit longer, but, we've had to speed up our initial timeline here. Okay, let me see. Let's see, automating entire AP cycles. Okay, so it looks like they're in business payment software. Thank you, Brogan. I appreciate that, sir. Yeah, it's come a long way. I know y'all have been along for the ride for a while. I'm not a day one burner. I've been, part of burner market trading since about May or June. TC and I have known each other for a long, long time. Grew up, went to the same elementary school. Weren't really friends because he was 2 years older than I am. People were always confused that TC is older than I am, but he is. He's got that baby face going for him. We worked at TGI Fridays together, serving tables, serving endless apps every Friday and Saturday night for 3 years. Me and him closed the dining room together. So the dining room closed at 2 a.m. So me and him for 3 years would be, living it up, making money, grinding, hustling, and having a good time together. He's got a great attitude, hard worker, someone you want to see succeed. And, when we both went our separate ways as we transferred into, from community college into, he went to Illinois State, I went to University of Texas, and, when I came back after about 3 more years, him and I reconnected a few times, but then, we reconnected over stocks after his workhorse started blowing up, and he started teaching me about options and whatnot. He started teaching me, the ins and outs, and I started, developing my own, you know, investment style, my trading style, so to speak. I traded for a little bit, decided it wasn't for me. I can't afford to pay that kind of attention to it, unfortunately. It's a ton of fun. I love checking charts every day. I love being on the stream, but we used to stream exclusively in Discord all day long every day. And I was preaching to them, like, we gotta get on YouTube. More people gotta see this, TC. I'm an online marketer for a living, so I mean that's Growth Saloon. It's an online marketing company. Well, it's a growth company, but online marketing mainly. So I told them we got to do YouTube, and we started doing YouTube. And then I don't know if y'all joined then or you joined before, but we're glad to have you as part of the Burner Market Trading family. I'm glad that the YouTube advice paid off. And yeah, I'm just trying to help TC conquer his dreams, right? There's nothing better you can do for your friends than help them achieve their dreams. So, someone you want to see succeed, he'll always have my back. I'll always have his back. And that is the story of how TC and I have gotten here today. But yeah, it's crazy how we're evolving. I'd agree with that. If y'all saw where we were 6 months ago, I can't imagine where we're going to be 6 months from now. Got to keep growing. It looks like their fiscal year ends on June 30th, so I'll make note of that. 793, 7. So they're down a little bit of money. All right, total liabilities. 345, 649, 123, 400. Okay, so our liabilities are going down, which is nice. You'll see that in a second. Oh, no, you won't. Yeah, they reduced their liabilities from $350 million to $4,000. That would be great. Oh. That's what's going on. I turned off numlock. Zero 803 123. Boom. Okay. So we've reduced our liabilities by $55 million. That is the best red you can see on this sheet. Assets have gone down by 14 million. Liabilities have been reduced by 55 million. So our shareholder equity, I guarantee, is going to look very nice compared to what it looked like at the end of their fiscal year in 2020, which is June 30th. Let me see our current assets. 256 481. Current liabilities 38946 123. Boom. So we have very healthy liquidity ratio. Current ratio shows us our liquidity. Our debt to asset ratio shows us that we are financing more on shareholder equity than we are on liability or on debt, which is great for us. Shows us that, the closer this number is to zero, the safer our investment is. The company's not going to go belly up. They're not overextended. Shareholder equity, current period, 432, 987, 123. Compared to the end of last period, told us this is going to go up, and I was right. Boom. We have increased our shareholder equity by almost 40 and a half, almost $41 million, which is not a small deal, that's for sure. Preferred equity, let's see if we're paying any preferred stock. Nope. And then we'll find our outstanding shares in a minute. This is for Q2 2020. I'll put a little note here. Fiscal year ends okay, there we go. Revenue. Revenue from the current period, This is going to be in thousands also, so 116,024, 123, 111,691. So our revenue has gone up about $4.5 million. Great sign. How about year to date? Let's see. 228,389, 123. Previous year to date, these are 6 months. All right, let's look at our incomes now. So this year we did more revenue, but we lost. We did $4.5 million more in revenue. We lost about a little bit more than that. Previous year, same period, we gained that. And then year to date, we're only down that. Something tells me we're paying off some debt. That might be why we're losing money, which is okay. That's why that's exactly true. Our liabilities are shrinking, as you saw above. So they're paying off our debts, which we want them to do. Reduce our liabilities as much as possible. If we can run debt-free, our money's very safe. You don't want to run debt-free for the sake of growth. As a shareholder, you want growth. You don't want it to stay stagnant. Yeah, I did do that. Oops. So we've gone $7 million in the wrong direction. Not a big deal, but let's see. Year to date, we did -4,224. It looks like most of our losses came this quarter also. Previous year to date, we had gained that. Let's look at our profit margins. Profit margin previous year was about 2%. Previous year, first 6 months was 1%. This year, first 6 months were -2%, -4%. Profit margins are so small as is, take that as you will. I'm going to go and copy this link really quick. I forgot to do this for the last one, so I'll have to get it later. All right, let me find our shares. We can move on. Okay, so we've got 42 million shares. There we go. Gives us a book value of $10.13. We're trading at 4 times that, so I think we're in a very healthy range right now for you, Savvy. This is ePay. I don't know what catalysts they have on the horizon or how bullish you are on the company, but I think it's very healthily priced right now. I think there is room for growth. If you get any news, this price can shoot up immediately. So 44 bucks a pop, something you like. I like it too. Let's see. TWND. That's the one we drew with double mergers, buying 2 companies. Let's look at that. SPY is on VWAP and support. Now, I'm not familiar with indicators. What is VWAP, Brogan? Let's look at TWND real quick. Volume weighted average price. Ooh. And so what's the deal with that? What are we looking for there? If any of y'all are on Clubhouse also, I do a thing on Wednesday nights called Teach Us Something Cool. Y'all feel free to stop in there. We can chat. I think this week we're in between talking about the market, like the looming market crash. I know, bears. I don't know when it's coming, but it will come. We can't be naive that it won't come. So we'll be either talking about that or NFTs. We're kind of discussing that right now in our group chat. But yeah, you guys would like it. For the price should be based on recent price action. Larger volume nodes raise or lower the VWAP more. Helps a lot with weeding out low volume moves. We'll talk more about that. I'm sure Taylor's more familiar with it than I am. I want to make sure that I understand it correctly too. Let's see. Complex leader in cloud native risk analytics elects to become a public company through a merger with Tailwind Acquisition Corp. Okay. So what were you saying, Brogan, about them buying two companies as part of the merger? I'm not sure what I'm looking for here. Well, I'm not seeing that. I'm sorry. I'm not seeing it right now. Oh. Ooh. Okay. Never mind. Sorry. You need to read a little bit further. As part of the business combination, Complex has also entered into definitive agreements to acquire two companies in the cybersecurity and insurance analytics industries to further extend. Huh. Centaur's decades long technical and national security sector experience gives Complex greater leverage, cybersecurity, and broader analytics offerings. That's why you acquire companies, right? I will definitely take your advice there, Tiger House. yeah, that's why companies acquire companies. I'm really curious to see if this was accounted for in their merger deal. Complex investor presentation. Should I just troll the Discord right now and tell them that Elon's in here? Guys, Elon just joined. That's what I do for the teach us something cool thing every week now. I always put a special guest Elon Musk with an asterisk and then put it in the description. Elon Musk is potentially gonna show up. Cause he could, I mean, we don't know. He could any given week. I want to see their investor presentation. Boom. Thank you. Alright, let's break this down. Transaction summaries up here. The cash proceeds will be used to fund Centaur. So it is accounted for in there. They're giving them X amount of dollars in the pipe because of, well, $200 million in the pipe to acquire those companies. Hey, you would love Clubhouse Savvy. Let me know if you're interested at all. I can send you, well, I'd imagine it's going to be super late your time. I don't know what 9 o'clock Central Time equates to in the UK, but you might miss out there. I'm trying to do it too, where I'm going to post it on YouTube later, so you can always watch and see. If you're interested in the conversation at all, from weeks past. So I'm going to start doing that as well. Like I said, this channel is going to be a little bit different than how Taylor runs his channel. I'm still going to do the daily streams like we've been doing. Um, maybe the following will build up. If not, love talking in here with y'all anyway. So I'm not too concerned about following. Do something because you love it rather than, for the followers. Um, and I remember when Taylor was first starting his stream too, we had like 5 people in there, and then we'd have like 10 people in there, and then it'd be 15, then 10, and just kind of bouncing back and forth. And then all of a sudden this TSMP event comes up, and, we met a lot of people through there, where we had like 1,600 people in there, and Taylor was literally shaking. Uh, I was just super happy for the guy because I just kept telling him, I'm like, stay consistent, dude. Just keep doing it. People love you. Keep doing it. So, regardless if that happens here, not too concerned about it. Love chatting with y'all anyway. Alright. So this is accounted for in this acquisition. It's going to be accounted for in their enterprise value, which is 10 times what they currently do in revenue. Well, 8.3 times that, okay. Cloud platform, Salesforce. Huh. Okay. Looks like cloud native risk mitigation, it looks like. $164 billion PAM. Land and expand, big fan myself. Show me that team. Wonder what their experience is. I'm going to pull this over here to the left just so I can put it onto the sheet. This is TWND, right? Oops. There we go. TWND. Complex. Looks like they're in, I think, cloud computing. So cloud native risk analytics. Okay, let's see the transaction summary. Enterprise value 1173 123 456. Equity value is 1448 123 456. Boom, current as of 3/2/2021. Alright, I think this is TWND is the current ticker. Oh. Okay. Hasn't even been touched yet. 1089, it's gone down. This could be a home run. Okay, so we are getting 23.1. Tailwind sponsors are getting 5.2. I mean, you're getting a pretty fair price looking at it right now. You know, we're getting 28%, 28.3% of this pool of what we see on the current stock price. That's higher than I've seen on pretty much any SPAC that I've invested in, for sure. Any SPAC that I've even analyzed for y'all. That's pretty, it's a pretty fair price. So they did a great job negotiating this for y'all. They just acquired 2 companies pre-merger now. That's only going to make them a much stronger company. That's why they acquired them in the first place. I really, you know, I don't know enough about cloud native risk analytics to just dive in right now, but you can probably get a pretty fair price right now, and you can watch that puppy go up. Let's see what's going on, though. I think we're on slide like 30 something. The financials. Let's look at it. I want to see the revenue. Why are they hiding the revenue from me? Hmm. Y'all could see with me. I can't find this revenue for the life of me. Scott, what's going on, my friend? Great to see you here again. Is Open Door down? Open Door was down almost, or Open Door is up almost $2 today when I checked. I can't find their revenue for the life of me. There we go. Okay. Now let me go ahead and do this. Let's see, future revenue predictions. So we're gonna do 141. That's in 2021. We're gonna do 303. That's in 2023. We're gonna do 420. That's in 2024. Put notes of these. This is 2024. Boom. There we go. All right, that is good for a compound annual growth rate of 44%. So their gross profit on that is very healthy. I'd be very curious to see what their net income looks like at the end of the day. Okay, so what do we know about Complex? What is their... Oh, I can fill this in. What was this SPAC? This was VGAC 23andMe. Oh, I didn't have a chance to get through everything. What do you know? Do they have any notable partners? Do they have any notable competitors? I can do this. We pull up their TAM. Recurring revenue, we love that. $160 billion looks like the number we're gonna end up with. Let's just double check. Oh, so they just recently acquired another company too, so they're bringing 3 more companies under their umbrella. 164.2 billion, that's our number. And you guys have been worried about open now. Oh no, we're red. I'm sorry, we're green. Whoop whoop. The rich get richer. Ha 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 ha. Alright, we got trifactor. Sensei. C2 SEC. And Prodeo. Complex partners. Oh, that's a big one. Splunk. AWS. I don't even know what Pop is. I'm not going to include them. They had a cool logo, though. Give them that. Decent acquisitions. Oops. Pull up this presentation. Bring it back over here. They had a slide on that of ones that they just completed. So I do want to put that down here because this is a unique case. You don't typically see companies going public and then also acquiring, two, and we just found out 3 other companies before they even go public. That's incredible. Where did these go? There it is. Okay. So we got I'm not gonna put all those notes in there. There's a lot. And then Centaur. Oops. There we go. Yeah, I mean, I like TWND, I think. Shit, where did everything just go? I like it. Good eye, Brogan. Right now it's just myself and Ben who can view this sheet. I'm still trying to figure out the best way to do it because as you can see, even with Ben on here, you know, the stream slows down my computer drastically. It's a good computer. It's an HP Spectre, so it's, you know, top of the line for PCs. It's like 2 years old now, so maybe, you know, that has something to do with it, but it doesn't have issues with anything else. Um, Google Sheets always slows down my computer, and the more people we have in a Google Sheet, the more it's going to have to refresh. Also want to keep it private, you know, with just, you know, certain members of our community, you know, obviously y'all included. Um, so just trying to figure out the best way that I can do that. Because I mean, I even think, you know, I might move away from the Google Sheet, you know, when I'm live on here, just because I can see, you know, how much it slows down everything, and just go back and manually import everything every day. That might be easier, make things, you know, run a little bit smoother. All right, what do we want to do next? We can do. Oops. We could probably do OCGN, or we can do AKAM. I'm gonna do AKAM. We'll have to talk about that on Discord, Brogan, because I'm not familiar with how to do that at all. But that sounds like it could be a good option for us here. We got some tabs. Stuff is tweaking my computer out now. Oh, this is beautiful. I needed to save this as well. Go back to public now. Boom. Now I'm going to get out of this one. Okay, so we're going to do AKAM. Boom. So we can do cybersecurity, CDN. content delivery network, and cloud. Current as of 3/2/2021. $6.54. 5.94. Because the market cap of $15 billion. Who is that, Savvy? Oh, they just, looks like AKAM just released their earnings late last week. Oh man, they're a good company, so they got a 100-page earnings report. Let me go see if I can find the first signs of life. Nope. Where is our balance sheet? Nope. Alright, total assets. These are in thousands except per share data. You got it. Let's see, our total assets are 7764, 130, 123. Previous year end 7006, 886, 123. So we've gone up by almost $1 billion. Nice. Total liabilities 3512, 834, 123. Looks like we've increased our liabilities only ever so slightly. And how about our shareholder equity? What are we looking at? Oh, sorry, this is current assets. We'll get to that in a second. Got ahead of myself. 29, 531, 123. And the total current liabilities 758, 170, 123. So we are very liquid. We are okay there for sure. Yeah, I'm unfamiliar with Joby. I was asking for some more information on Joby, what they do. 4251, 296, 123. Previous year end, we were looking at 3657, 958, 123. Boom. So we have increased our shareholder equity by over $500 million. That is phenomenal news for shareholders. We can all rejoice. $0 in preferred shares. Beautiful. This is for their 2020 annual report. Let's go look at their revenue. Not sure if they're going to have the quarterly revenue in here. Let's see if they've got their Q4s. Yeah, it's not that they have their Q4 on here. Not the end of the world. But I did want to include it if I could. We'll just do their annual revenue. So we're looking at a fair book value. We're trading at 3.5 times the book value right now. This is, not undervalued, but certainly not overvalued. Could be a great opportunity to get in and buy more if your liquidity allows for it. Um, just in terms of like what scale I'm trading at right now, I know it wouldn't be a good idea for me to go and try to load up as much as I can on a $100 stock, just because if I'm going to invest $500, for example, in something, I can buy 5 of these versus and NSTB. Okay, I'll take a look at that. Um, yeah, it is a great company. If I were to take $500, or let's just call it $1,000, even thousand, I could buy 10 shares of these, maybe 11. You know, if I wanted to stretch a little bit. But if this were to 2x and go to $200 a pop, it's gonna be $2,000. How long is it gonna take for a $15 billion company to become a $30 billion company, or really realistically over here, 31.5 billion for me to double my money? Versus I can go play a SPAC right now with $1,000, right? And I can go find a company like whichever one was the last one we just did. That was a good opportunity also at $10.19. I'd probably go out and buy some warrants on that company, even though they're out of the money right now, just because I saw what they're valued at. I see the moves they're making. They're acquiring 3 companies pre-merger. That's only going to make them stronger. They're already doing $100 million in revenue. Their growth looks like it's going to accelerate pretty fast. They've got a um, decent partnership base already, so an opportunity like that, I can get warrants for those companies at like $2 or $3 right now, um, and then I can take those warrants and I can watch the company go from being $10 a pop to being $20 or $30 a pop, or if you're in best case scenario, it runs up like CCIV did, and you can jump out before everyone else does. Um, but yeah, those warrants, they can make you a lot of money real quick. So if they're at $2 or $3 a pop, I can buy 500 of them at $2. I can buy 300 of them at $3 for $1,000, and I can really um, amplify my money that way. Just allows me to get more equity. I'm looking to get a larger chunk of the pie with my money right now. But depending on what level you're trading at, these are 2 great companies here. There's a reason they're priced far away from zero, right? So let's AKAM. Let's look at NSTB. NSTB SPAC. Apex Clearing going public through SPAC. Let's take a look at them. So to answer your initial question too, I think you're still fine. Even if the merger were to finish, like they're doing the merger, right? They're agreeing to the merger at this set price, knowing that the shares in their public pool with their founder, their sponsor slash founder shares are gonna be $10 a pop. They're gonna underwrite them for $9.30 to $9.70 typically. So when they release them to the public and we can start buying them, they're going to already make a profit on them as soon as people start buying shares. Let me get this in here. So even if the company merges or completes the merger at under $10 a share, you're still okay as long as you think the company was valued correctly. Let me get their investor presentation up. Let's see what they say on their site. I'm going to hear it straight from them. FinTech. Oh, dude, bro, don't even apologize for a second, brother. I appreciate you being in here with me. I want you to ask me questions. If you guys don't ask questions and you guys aren't engaging with me in the chat, it's gonna be me just kind of talking to myself for, 3 hours. I love talking to y'all. I could be out taking care of clients right now, but I love doing this. I'm building my knowledge with y'all. If I can share anything with you, you have any questions, and I know the answer with that or the questions, I'll happily tell you, so you don't have to take all the time to learn like I did, or learn the hard way like I have. And if I don't know the answer, you're asking me something that I don't already know about. So what I do in those cases is I go and I find out about it, right? So we find out together. So I appreciate the questions, brother. Don't even apologize. Okay, so they're in FinTech. Let's see our enterprise value per the deal. See, I don't know. They don't have like a clean one. Oh, there we go. Nice. Enterprise value 4,662,123,456, $4 billion. Equity value after the completion 5.6 billion. Current as of 3/2/2021. Current stock price. Let's go find that. They're trading flat right now, 10.02. Last close 10.17. Market cap, come on. All right, we'll go to Yahoo Finance. Give me a second. Let's go find percent public shareholders. 7. Our SPAC sponsors are getting 2. Gives us a post-merger adjusted market cap of 5.5 billion, which is right around what you see over here, right? So not too surprising over there. Go above and see if these are correct. Yep. Let's go look for our revenue now. So they're highlighting a $107 trillion wealth or generational wealth shift. I keep hearing about that more and more. I do agree with it. What are the people going to do, or what are the children going to do with all this money when their parents die and they leave them, their wealth? Seeing some idiots who are just donating it all. Not knocking donations, but that communist mindset's not going to get you too far. I'm not going to go down that rabbit hole again, though. That is still not what these streams are going to be for. We might talk about stuff like that on Teach Us Something Cool. Communism and capitalism are very interesting topics to me. So, in my independent time, I love learning about just everything in general. If you spend your life just being interested in things, I think Naval said this recently, those who are interested become interesting, right? You have more to talk about. You just want to learn how the world works. And so you've got more to add for conversations, and yeah, I definitely have noticed that already. But we won't go down that rabbit hole today. All right, revenue. $369 milli. Let's go look at our projections, though. Oh, they gave us a lot in this investor presentation. This is more than we typically see. They gave us assets and everything too. But I want to see the revenue growth predictions. Okay. They're giving me operating revenue. Maybe this one. Nope. This one. Nope. Integrated crypto experience. I just have to go off their operating revenue. It's not the end of the world. TWND warrants still are moving right now. If I still want a discount, I might jump on those. I got a couple specs I'm looking to get into today. I need to sell my ride. Alrighty, just sold out of ride, folks. Now I need to go transfer my funds to my E-Trade. What? I'll figure that out after. Okay. Operating revenue. Looking at 290 million. That's 2021. 346, 1, 2, 3, 4, 5, 6. 2022. 418, 1, 2, 3, 4, 5, 6. 2024. Our CAGR on that is looking like 21%. This is going to be insert note from 2019 to 2023. Let me go get these numbers again. I'm going to get their operating revenue instead of their actual revenue. Six, 3, 0, 0, 2, 3. That is 2020s. Let's look at our TAM. We can move on. Ooh. They got a lot of really decent clients. This could be a home run, Brogan. Man, y'all are bringing some heat to the table today. Usually I come on here, or I'm on BMT, and I gotta look at OTCs all day long. I gotta look at SPACs that are just, you know, hyper inflated, or on terrible deals, and you guys have just been bringing me heat all day. This has been a refreshing 3 hours. Appreciate y'all. What is their combined TAM though? Looking at 50, 93, 94, $100 billion market is what they're estimating. All right, so let me look up Apex Clearing partners. So I'm not sure about partners, but I'm going to go into what companies use it. Because this list, like I was scrolling through here quickly, and it was really, really impressive. The fintech, fourth fintechs, I love that. Yeah, $100 billion plus estimated TAM. For those of you who know I'm on Open Door, that's a $1.6 trillion TAM, and you can see how big 100 billion is compared to a lot of these companies we see in SPACs. Oh man, where did this slide go? Here it is. Look at these. I'm gonna bring it over just so y'all can see it too. Look at these. So they're a fintech for fintechs. Let me just bring this full screen for y'all so you can see. Can y'all see this? Let me know if you can see it. Got. If y'all can't see it, you gotta let me know. But I'm gonna start going over it. You got eToro for brokerage. You got Webull for brokerage. You got Ally Investing for brokerage. You got SoFi for wealth tech. You've got StockTwits for wealth tech. You've got Titan Stash for wealth tech. You've got Orion for turnkey advisory tools. InvestCloud, Bamboo, Fusion IQ. Awesome. Thank you, Scott. I appreciate that, my friend. Not familiar with the rest of these. But yeah, very, very impressive customer base. Oops. Bring that up here. I'm going to take this all with me over here. I'm going to put this in here. Orion. Let me put a note on this. These are not partners. These are just customers. There we go. All right, let's go find their competitors real quick. Copy this, put the investor presentation link over here. Beautiful. All right, Apex Clearing competitors. So this is like a true DD set. That's what I like about only having, 4 or 5 of y'all in here. So we can get much more personal, answer more questions that y'all have. You don't have to feel like you're hogging the time for everybody else, like some of you may have thought, in TC stream. And we can actually do like a true DD session over here, right? We can actually go through and find their competitors, find their partners, find notable people attached to them if we can. Really dive deep into here like you need to before you make an investment, not just rush through. CEO's got a pretty decent approval rating. Love that. Is Vanguard really a competitor of theirs, though? Please verify I am human. Okay. Pretty embarrassing. I took 6 attempts at the please verify you are human yesterday. Which tells me I'm in the right direction of becoming a robot like I set out to do. Okay. Go. Let's wrap this also. Here, I'm just going to do this through here. I'm gonna wrap all that. Beautiful. Let's bring this to the top also. And the rest looks good as is. Let's just do the same over here. Beautiful. All right. So there is our DD on NSTB, and I think you're going to be more than okay with this one, Brogan. I think this is going to be a big money maker. If you're getting warrants on this, and I'm going to try to load up with you also, it's a matter of how quickly can I transfer the cash that I just got for selling Ride. That was a 100%er for me. You know, I kept my money tied up there for a little bit longer than I would have liked, waiting for this workhorse news, and yeah, there's still a chance, but I just don't want to keep my money tied up there any longer while we wait for this to unfold. So I got 100% there for a gain. That was a SPAC. You know, everyone I think's been cleaning up on SPACs this year, but I've made a killing on SPACs. Now we go find the next one. We got double the money. All right, so we've got everything. We've got the link in there. Beautiful. You know, they're valued at 4.5, 4.6, really close to 4.7 billion dollars. Equity value after the money that they get from the pipe and everything is infused into the company. Exactly, Brogan. That's the name of my game. I love warrants. Love warrants way more than shares. You know, they're different for every company, of course, but for the most part, they stay pretty consistent. So many slept on bangers right now. Exactly, brother. We got a link up in the Discord. Wonder maybe after I do the stream every day, I can just put together like a little slideshow like I was doing before of like which ones we went over that day. But yeah, I mean they're valued at this after they get their cash infusion. They're saying their equity value is going to be $5.6.5 billion, and currently at $10.02, adjusted post-merger, they're trading below that equity value. So if you agree with what they were valued on, which I'm not sure what they were valued on, you can go see that. That might be a good thing to include in here also, huh? Back out of here a little bit. Pen, what's going on, brother? How you doing? We're going over your sheet right now. They are loving it. We got some killer plays in here today. They're asking. I'm talking with Brogan right now. Maybe me, you, and Brogan can hop onto like a Google Hangout or something later this afternoon if y'all are free. I do have some time, and we can kind of brainstorm how we can make this accessible to other people in Discord. Because right now, Ben, what I've been telling Brogan is, I think I'm gonna navigate. I like the Google Sheet for keeping everything in one area, but I might like duplicate it into a spreadsheet and just start manually doing it every day because the stream is slowing my computer down to shit. And the Google Sheets always slow down my computer. But if we let everyone get into the Google Sheet, the more people who are in here with us, because it's cloud-based, it's going to continue refreshing over and over and over again. It's going to really slow things down to where it might crash the stream or it's just not going to work. Which is why I'm hesitant to let anyone in there right now. So if you have some time and Brogan has some time, later this afternoon, we can coordinate something and hop into like a Google Hangout, where we can kind of conceptualize an idea of how we can make this more accessible. Create PowerPoint to show all essential data for stock that can easily be shared. Got you. Awesome, awesome, awesome. So our brains are on the same waves right now. I want to see what their enterprise value is based off of. They usually tell you. Yeah, exactly. Exactly, Brogan. Yeah, did you ever hear back from Smart Sheet Ben? Okay, so we can just do the math ourselves right now. You know, I don't know what they base their enterprise value off of. Unless... See, their revenue for 2020 was 369.5 million. Let's take this. 466200000. We're gonna divide that. Oops, one too many zeros. Divided by their actual revenue, which was 369.5 million. So their revenue, or their enterprise value, was 12 and a half, like 12.62 times what their 2020 actual revenue was. So it could be a high valuation based on that. But in terms of, if you agree with their valuation, you know, you can get in at the floor right now. And warrants, you know, you're going to play some out of the money warrants. Those are riskier, I will warn you. You know, if they expire out of the money, they're going to be worth a penny a pop. So, something to keep an eye out for. That is Apex, NSTB. I think I like it. I think he likes it. All right. Let's see what we can do next. There's just too many good plays out there, and there are so many people out there right now who are throwing their money into these just like extremely overvalued companies. You know, we all saw that CCIV debacle, right? And that's something that y'all knew I warned about for over a month leading up to that. You don't know what the terms of the deal are going to be. This is already, you know, without knowing the terms, we've already inflated this market cap as the public to 14, almost 15 billion dollars pre-merger. And then when the deal terms finally came out and it was 92 billion dollars, or adjusted to 92 billion dollars, you know, the smart investor, the smart money that was in there that made it run so far, they knew that. They knew what their game plan was the whole time. They knew they were gonna watch it run up, and then as soon as the deal was announced, no one can trade after hours. They knew it would get announced after hours. They find out about the stuff way before we do, way before it's ever announced. And as soon as it was announced after hours, they all dumped all their money out of there. They knew the terms of the deal, but they rode the hype train as far as it took them. And there's a lot of companies like that. I don't want to single out CCIV because I didn't like seeing anyone lose money on that one. Tesla's like that right now. Just wait. As soon as there's a market crash, I'm not saying Tesla's not going to zero, but you're crazy if you think they're going to continue trading at this clip compared to what they actually they actually do in revenue. There's a lot of growth priced in, but it's just too much growth. This is from their earnings. I did a little write up on this as well. Not a write up, but I went through their 10K. Tesla, look at that. Book value per share is $23.82, and right now they're trading at they were trading at 33 and a half times that. When the market crashes and people need money to pay their mortgage, people need money to pay for their cars, which they're not paying for currently. I just saw a report. A lot of telltale signs that a crash is looming. That's what the topic of our discussion will be tomorrow. Well, we're debating changing it to NFTs, so I'll have to get back to y'all tomorrow on that one. I can get you guys some invites to Clubhouse if you'd like to join. Um, when the money or when the market crashes and people aren't getting money from the government anymore from this, pandemic, and we have to reap the consequences of printing money and then printing more money and printing more money and inflating the value of our currency, they're going to suck their money out of the OTCs first. Those are the riskiest plays. They're going to suck their money. They're going to say, okay, I've made enough money in Tesla. It's not really worth this. Or Tesla starts going down. I need to protect my money. I'm going to get out too. So they get out of there. All the companies that are overvalued and just inflated that you can write up for short-term gains right now, those are the first ones to get wiped. And that's why I love value investing, because when everyone was panicking last week, when all these companies are tanking, it wasn't even a crash, it was a correction that we needed. We'd had like 5 straight green weeks. It was insane. Um, my my positions went largely unaffected for the most part. Like Bitcoin and Ethereum, I'm going to even exclude from there because those aren't stock market, but those actually went up as the stock market was correcting itself. Bitcoin and Ethereum were climbing, which was crazy to see. Um, yeah, that was just crazy to see. But my stock market positions, with Ride, with Laser, with Open Door, were largely unaffected, or if they were affected, they weren't affected at nearly the scale and level that everyone else's were, who were in these positions just based on hype, who didn't realize how overvalued their positions were becoming. Um, those are the ones that took a shit last week. So, yeah, just caution yourself. That was a taste of what happens and when people start to panic. Those ones they've climbed the steepest. They have a steep drop ahead of them as well. Mine, they climb like that. When they correct like that. When you climb like this, you correct like this. You need levels. So, not saying I don't know when a crash is coming. I don't think it's anytime soon, to be honest. Maybe in a year or so, maybe a little bit less. But as long as the government continues pumping money into the economy, it's not going to correct itself just yet. It's an artificial stabilization of the economy. Still need to get back to them. Wanted to wait until we had a good schedule to move forward. Exactly. I appreciate that, Ben. Thank you, sir. You think space companies will be the next huge thing? Half of your nightly recap was mergers between space companies. Yeah, didn't was it Rocket Labs or something just go or announce a SPAC yesterday with someone? I don't know. I think space companies are the future. You know, which ones you want to invest in, that's going to be completely up to you. I don't know who's going to win that landscape. If I can invest in SpaceX with a SPAC, that would be great, but they're not going to go public through a SPAC if they even go public at all. They'll do a traditional IPO. Boring Company, or no, not Boring Company, Hyperloop is rumored to be looking for a SPAC this year. But we'll see if that ever comes to fruition. It could be just Elon trolling people. I think that's the future as well. That technology is crazy. Not even just the hyperloops. The loops that they do are insane. If you've never seen those, like they're talking about putting one in between this, like in the west loop of Chicago, so that's like the center of the city, to O'Hare Airport, where you can get there in 15 minutes. And so they'll have like consumer uh, transit options where it's going to be cheaper than it would take to even take a train or a bus. But then they're going to have like the private ones that'll be priced more in line with like an Uber. Um, but they go because it's not like the Hyperloop where it just zooms you there in like this vacuum sealed tunnel. It's just a loop where these are like actual, vehicles that are designed for it, and they just go in one straight line as fast as they can, and all the vehicles in front of them, they go in certain increments. So you go, they show up, you get out. 30 seconds later, another one shows up, you get out, and then they zoom back around. And they're talking about putting that one in between the center of Chicago and O'Hare Airport, which would typically take you about an hour or so, depending on traffic. Take you 15 minutes. So they're doing things that are well beyond just the Hyperloop. I think that's the future of on-Earth transportation. Because why wouldn't people use that? Let's see. Got space, SAS, and another rocket launch spec. Those are going to be long-term holds. You got to realize that too. The space companies you invest in, because when are they going to turn revenue? They're going to be using their investing money. They're going to have more and more offerings. That's going to dilute the share pool, because it ain't cheap to launch shit into space. It costs a lot of money. We talked about space last week on Clubhouse for Think of Something Cool, or Teach Us Something Cool, sorry. Teach Us Something Cool topic was space, and a lot of cool stuff discussed on there. We had one or two members from the Discord who came and popped in and just chilled with us and just listened. They didn't really raise their hand or want to say anything, but that was cool to see. Y'all, like I said, are the best community on the internet. So yeah, they came in there. We talked about space, and I've got a network of people who can talk about pretty much anything. So I'm trying to get people on there who know their shit about whatever the topic is for any given week. This week's topic is either going to be the looming market crash, we'll go more in depth with that, or it's going to be NFTs, which are a up-and-coming digital asset, it appears, which I was super bearish on, but I have to do more research now before the show if we do that. So the point of that being, I don't know when those companies are going to turn revenue, right? I don't know when they're going to stop shooting money out of the atmosphere, quite literally, and not having money coming in besides for investors. When the first company that is able to commercialize space travel is going to make a lot of money. They're going to make a lot of fucking money. I just don't know who that's going to be, when it's going to happen, how long I'm going to have to wait to see those returns. I do think you might be able to see some initial returns if you get in the SPACs early, before the rumors get around, or when you get in with the rumors and then they're announced. There's opportunity for growth there for a short-term clip, but as far as anything long-term goes, I'm not sure. Hope that answers your question a little bit. I'm not too versed on the topic either right now, as far as space companies go. I think they're cool as shit though. Oh, Brogan, I'll shoot you a Clubhouse invite on Discord. Remind me. I am a well-respected Clubhouse member now, so they have loaded me up with more invites because my people that I invite are good contributors to the Clubhouse. So, yeah, if you're actually interested in joining Clubhouse, I think you'd like it a lot. It's actually the dopest. It's my favorite app to use nowadays because you get to, you don't just have people like me on there. You've got people like Naval Ravikant. You've got people like Elon, obviously. Zuckerberg was on there. Vlad from Robinhood's been on there. Shamoth's been on there. These people who they're just chatting. You can just pop into their discussions and just listen to some of the smartest people in the world talk about smart people shit. It's actually very refreshing, and it's it's not filtered for people. It's not edited like a podcast would be even. It's just all fresh, raw thoughts, authentic. Authenticity will always win in this world. People are so hungry for authenticity nowadays more than ever. So that's why you hear me on my channel swearing and whatnot. That's me at my rawest, most authentic form. I'm just gonna have a conversation with y'all the same way I have a conversation with my friends, people I do business with. If an F-bomb flies out, then the hell with it. I don't just swear for the sake of swearing typically. But on TC's channel, that's a family-friendly show, so I abide by his wishes. All right, what do you guys want to talk about? I'm not sure where TC is. I can give him a call. We got time for one more DD dive. What do you guys want to do some DD on? I've gotten to all of these are. Forget what I did for SNPR. We might be able to dive back into that one. I did that one very quickly the other day. This was before CCIV tanked and everyone was riding that train, so it kind of got swept right over. I don't think I have it on here actually. Okay, let's do that. Let's do SNPR, shall we? I'm gonna be doing a watch party, guys. I'm not sure what time it's at yet, but on the 4th, Open Door is having their earnings call. So I'm already registered for that. I've been registered, and I'll be listening in on that on here. If you or anyone you know wants to hear how Open Door is doing, as you know, that is my largest holding in the actual stock market. Volta, right? Volta investor. Oh shit. Okay, maybe not SNPR. I'm gonna take care of Ben, because Ben is an absolute animal. Like I said, this spreadsheet would not have happened without Ben. The dude is a beast. Let's see. Spent so much time watching the Meet Kevin Clubhouse recast. It's amazing watching people I relate to speak freely about things that they're actually impactful. Yeah, exactly. And I just like I said, like I told you, I'm just naturally interested. I like to know how things work. Uh, Anything in the world. So this allows me to kind of explore some other topics that aren't just finance related, that aren't just marketing related. I think space is the coolest shit out there. So that was an awesome conversation. We started talking about the ocean too. I'm like, okay, guys, let's keep it on topic. Let's save the ocean for another debate or another conversation we have. So we're teetering between cool facts and debate style discussion. So I'm gonna save SNPR for another time. Let me do something for my boy Ben. Let's see, we got REKR. Ben, are these SPACs or already publicly traded, or what's the deal with them? I'm gonna do one more SPAC. CRNC stock. Beam is public. How about CRNC? Okay, so these are all. Do you have a preference of those, Ben? Do you want me to do? Would you prefer I do REKR, CRNC, or BEEM? Which one would you prefer? I'll do that one. Beam can wait. Did any of them have earnings come out recently, by chance? Let's see. CRNC had earnings filed on, oh, in February. Okay. And then let's see how REKR is looking. Weaker Systems. Let's see when they release something. Okay, so they haven't filed since November, so let's do CRNC today. CRNC is a software company. I will accept your cookies. Comes to mobility, we're redefining state of art with conversational AI products that unite consumers, transportation, and digital lives. We're building the heart and soul of the modern mobility experience. A global team dedicated to defining the future of connected mobility. Experiences mapping the journey ahead. Have tech, will travel. Still not even sure. I'm not sure what they do still. Products, looks like they offer a lot. Let's do automotive AI slash software as a service. Okay, it's going to be current as of today, 3/2/2021. Let's look at our current stock price. We'll refresh this one time. 111.90. Last close was 117, so we're down on the day. About 5%. Market cap 4 billion. Boom. There you go. Alright, let's pull up the reports. SMPR is going to get slapped. Okay. I appreciate the insight, fellas. Alright, these are going to be in thousands except per share amounts. You got it, dude. Right, so we got assets of $1.7 billion. We've got liabilities, or let's just previous years, let's not get ahead of ourselves. 1.687, 445, 123. That's previous year's assets. Oh shit. You know, their fiscal year ends on September 30th. So I'll make note of that below. So this is only 1 quarter into the year. Liabilities 707, 620, 123. But you can see that in 1 quarter they increased their assets by $13 million. Looks like a little bit of money compared to their entire asset pool, but you know, 13 million is still 13 million, so kudos to them there. We've also reduced our liabilities, you'll see, by 22 million. That's the best red you can see on the sheet. Our liabilities are being reduced. So our debt to asset ratio is at 0.42, making this a pretty safe investment. They are financing their operations mostly off of shareholder equity rather than off of debt. So if the market crashes and the debt collectors come calling in, we're not going to go belly up. Or at least we shouldn't. Current assets, 239, 325, 123. And the current liabilities are 174, 092, 123. Anything above 1.2 is considered a healthy ratio for liquidity sake, and we, as you can see, are above 1.2. Total stockholder equity. Right now we're facing almost $1 billion of stockholder equity. Previous period, so this is only a month, or I'm sorry, 1 quarter later. But you can see what reducing our liabilities and increasing our assets does for our equity. Our stockholder equity, so our assets only increased by about 13 million, but because we reduced our liabilities by so much, our total stockholder equity has increased by $35.3 million. So that makes us very happy stockholders. $0 in preferred. We'll find the outstanding shares in a little bit. I want to see if they have anything for quarterly revenue. Well, this is only 1 quarter. I don't know what I'm talking about. Well, I want to see this quarter versus last year. Beautiful. So Q1 of, so this is Q1, shit, what is this, Q1 2021? Oh, it's Q1 2020. Let's see. September 30th, 2020 that it ended. Alrighty, so let's look at the current period. We'll do current period first since I've got this up, and they have the annual at the very top, or the year to date I should say. Okay, current period. This is going to be in thousands, okay. 94, 964, 123. 2019, the same period, we did 77, 459, 123. So we've increased by 17.5 million this quarter. We'll get that one in a second. Well, revenue year to date is going to be this. We'll confirm. All right, net income or loss. We have profited 21,638, 123. Q1 of 2020 versus Q1 2019, we lost $11.762 million. I don't know why this stopped. I don't know if I undragged it or what. Okay, we'll get that in a second. I'm not sure where Brogan is. Brogan, what's your afternoon look like? I need to do some work on my end for like, you know, at least an hour or so. You guys free around 3 p.m. Central? I'm gonna message you all in the Discord. Works for you. Alright, I have not forgot that either, Ben. Just need to talk to TC, see what he's looking at. And then just check it on my trip one more time. Because right now it's between that weekend and it's between the weekend after on when it's going to happen. So I will let you know as soon as I know more info there. Yeah, we can come together at market close. Yeah, let me look at... Go back from the sheet. Let me take this link for right now. I'm going to pop it down here. Let's go find our outstanding shares. It's 3780123. Alrighty. Yeah, I just realized how close that was now. We're only like 3 weeks away. So I will get on top of that for you, Ben. Let me just double check, make sure these revenues are going to be... Yep, let's copy paste. Yeah, you can use my company name. No biggie at all. Boom. Okay, let's look at our profit margins. Current period, current year, 23%, is going to be the same, because only Q1. Previous year, same period, 15% in the red. So we are certainly heading in the right direction. Our shareholder equity is heading in the right direction. Our liquidity is very healthy. We are financing mainly on shareholder equity versus debt, which is great. Our liabilities are going in the right direction. Our assets are going up in the right direction. So we're looking at, book value per share at 26.71. We're sitting at a 4x that. This is right in that threshold of it still could be undervalued. You see how well they're performing. They're only heading more and more in the right direction. So I think this is, if you want to get into CRNC, or if you're already in there, I think your money's safe. If you want to get in, I think this is a good time. This is a good buy. I keep trying to get through as many of these as possible before TC gets back. Beam stock. So we're not gonna have enough time to do a SPAC right now. Otherwise, I would do SNPR, even though you told me not to worry about it. You are welcome, Ben. No problem at all, brother. I appreciate all the help that you have offered so far. You are an absolute tank. None of this would be possible without you. Don't forget that. So I just filed a quarterly on November 12th. What do they do? There's semiconductors, is that right? Mr. TC.
How you doing?
I'm doing pretty well, brother. I got some SPAC plays I'm looking at right now that are different than the ones I was already thinking of this morning.
Spectacular ones.
Let me finish going through this. You got like 2 minutes to spare?
Yeah, you're good, dog. You good?
I got Mr. Ben A in here. He's been busy as well.
What up, Mr. Ben A? What's going on, Mr. Ben A?
Yeah.
How you doing?
Yeah, I'm about to hop on a Google Hangout with him and Pikachu a little bit later today. See what we can do to take this to the next level. This is a EV.
Pikachu might try and hack me, bro.
I know, that's what I'm thinking.
With the computer, man. Watch him. You gotta watch that boy.
Pikachu?
Yeah, Pikachu.
What does Beam Global do? It says they do EV charging. I also saw semiconductors somewhere, isn't that right?
I'm pretty sure they're
Solar. Envision solar. I think yeah. Here, I'm gonna go to their website. I'm gonna go to their website and see what they say. Ben A said, "What up, TC?" How your play's doing today? I just sold out of Ride, by the way.
Horse took a dive, but we'll be okay. We're managing this position. We're gonna catch the squeeze and then get out. And
What's this squeeze?
a new squizzle, man.
There's a new squizzle in town?
There's a new squizzle in town, bro. We just gotta hold above 15. Math says it has to go up eventually.
Yeah. I don't think that's the thing, dude. I don't think Workhorse is a bad company. I think that what you're seeing right now is just like the people who are in there. Like you can see how much money was priced in for just that.
Yeah, what's up, Brian? Yeah, Spire's a little floppy, man. You know. Yeah, no, Workhorse bottom fell out on that. You don't have any of that left.
All right, let me go refresh this page one more time.
So what's up with TSMP? I mean, the shares unlocked today on, what was it, TD? But E-Trade's still locked up, so I think there's just a little friction with that.
Last close was 43.70.
Yeah.
285,
I mean, I think it's just a
880,
little
123.
wishy-washy stuff. I mean, a week will clear all that out, in my opinion.
Okay, so
I'm
you
not too
do think
concerned
they
about
have
anything,
semiconductor
but, yeah, I'm about
products?
to lock
Let's just
in here
do.
on YouTube. What are you on? You're in on CCIV. What other positions are you watching? Oh, dude, that LTNC, man, that kind of had a little bounce. I don't know where that's at right now. Oh, jeez, that's like a 75%er. Dude, these
This is their
these
Q3
pennies are
unaudited
just as volatile as these options contracts, you know.
total
But like, I guess
assets. Okay.
with the pennies, like, I mean, I guess your penny, your 100,000 shares, I mean, they could bounce back, right? They don't fade or decay, but.
I don't think these are in thousands. I think these are as is.
Yeah, it's just a different management strategy. I feel like a completely different, you know, like way to look at it. And
18.
so
This
it's,
was at
you know, I gotta dial in on that
7286.
now that we're on
109.
the Workhorse, right? Like that. Nah, I didn't unload it. Lord, bro, I didn't unload at 1730. Not too bad. It's holding. It bounced off 15.
Liabilities are low.
But,
We love
it
that.
was up to 16.
Total liabilities at the
let's
year
just hang
last
on,
year's
but we'll see
end.
what happens tomorrow. And
1.462, 837. So our ratio is very healthy over here. 0.21. We are financing mostly off of shareholder equity. Let's see our current.
You're on that like 20, bro.
So it must have been an offering or something. Current assets are way higher than the same time last year. Current liabilities are at 1908. Yeah, you can see how liquid we are because we haven't taken the time to allocate those resources into further liabilities yet. So I'd expect our liabilities to continue rising.
Oh yeah, now we just have a vision for like 6 months out from now.
Let's see, stockholder equity.
So yeah, I'm about to.
Current period is at 14,892,444.
Yeah, what's it at right now?
Last period was at 5,824,162.
Terrible, but yeah, sixes would have been better.
Do we have any in preferred? Nope.
Yeah.
That is a big ol' 0. Love that.
I feel like once all this funkiness shakes out.
This is for Q3 2020.
Yeah, there's things that like.
Revenue
At least there's like tracked
is unaudited also.
like we've watched progress on. Like.
So we're gonna see.
I don't know. Well, like my confidence levels in the Latin.
1, 2, 3, 7, 4, 3, 4.
Seems like a good hold over time. Yeah.
So our revenue's slightly down.
I'll catch you in a minute. Alright, peace, brother.
724. Almost done over here, TC. So our revenue's down about $500,000 from the same period of time last year. Let's look at the first 9 months now. We're looking at 4,644,000 for first 9 months of 2020 versus first 9 months of 2019. We are down as well. So we're down 600,000. Looks like most of that came from Q3 2020. We had a bad quarter, so it threw everything off for the full year. Net income now. It was actually a loss. For Q3 2020, we were looking at, we lost 1100023. So we brought in a little over $1 million, but that it took us, slightly over $2 million to bring that money in. In Q3 2019, we lost. So this company is not profitable as of right now, but I don't make my investment decisions strictly off profitability. We got to make sure we're heading in the right direction, though. So we'll look at our profit margins in a second. So far, first 9 months, they had lost almost 3 million. And first 9 months, previous year, they had lost on doing more revenue. They lost less money. All right, so we've got our profit margins, a lot of red over here. You can see these companies to the left of us. Those are two great companies that you can invest into, but those are also over $100 companies. And now you see why. Definitely safer bets. Now, if you look at their Q3 profit margin, you're looking at negative 89%, not great. Q3 previous year was negative 34%, so we're definitely heading in the wrong direction in terms of profitability, in terms of revenue we're bringing in, and that's pulling from our assets as well. First 9 months for 2020, we were at negative 72% profit margin. First 9 months for 2019, we were at negative 55%, so we are definitely heading in the wrong direction over here. I'm going to go ahead and paste this in there for you, Ben. Boom. Not going to take time to take any notes on this one right now. Let's just scroll up and see what we're looking at after we account for total shares. We're looking at, yeah, they had an offering in Q3. That's why they have a surplus of assets now and liquidity. I believe this is, yep, unaudited. Numbers are as is. That gives us a book value per share of $2.25. So at $40.70 that we're trading at today, we are trading at an 18-time multiple of what it says the book value of our shares are worth. So I'm probably not touching this company. You know, you do with that as you will, my friend. But I wanted to make sure I can get through as many companies as for you as possible in a limited time. So that's Beam. We've got REKR for a different day. SNPR we'll get to tomorrow as well. Brogan, appreciate you being in here with me today, my friend. And appreciate you being here as well, Scott. So with that being said, my friends, our time has come to a conclusion for the day. But I'll be back tomorrow, same time, 10:30 a.m. Central Standard Time. Set your reminders or ring the little bell next to the subscribe button so that you get reminded without me having to remind you that I have gone live tomorrow at 10:30 like I promised you. With that being said, friends, good luck to y'all the rest of the day. I will talk to you, Ben. I'll talk to you, Brogan, in about an hour or so. Happy trading until then, and I will see y'all tomorrow. Peace.